Hey guys, happy Sunday. First things first, I want to begin today's session with questions. Questions about trading and what challenges most people are facing with their trading, and then we can discuss about that. Then probably do one or two analysis, and then we move on. So first things first, does anyone have any questions about trading, or have you been finding anything challenging about your trades? Has there been any major challenge on your trades? You can type. I mean, you guys can type it up if you want, or you can speak. I can't hear anybody for now. I think I muted everybody, but you can unmute yourself if you want to say something. So, is there any questions regarding to trading, and is there anything that you would like to know, or you would like me to touch on, or something that I've explained in the past that that might not be clear to you, and you need clarification? No. Okay, so absolutely zero questions. I'm guessing. Kindly feel free to ask questions. I mean, I want to make it as interactive as possible, so we can actually touch on certain aspect of things we might not have touched on before, or we might have touched on that we might need to retouch again. So no need to be shy. It's a family, it's bringing people, bringing all of us together. So okay, Leo, nice one. So EMA for trades, right? Trade entries. Okay, how to read the COT report, what we things we're looking. Okay. All right. So those two. Does anyone else have any questions regarding anything else? So if you have any question, you can just drop it down below. So first things first, let me start off with the EMA. So um that's actually a great question, Leo. I mean, it's good that you actually asked that question. So point for price. Okay, no problem. We'll touch on that. So with the EMA, there's always three EMAs that I specifically use. I use the 20 EMA, which is represented by the blue line, the 50 EMA, which is the red line, and the 200 EMAs, which is the yellow line. Right. Most of the banking people use the 200 EMA. And basically, what the EMA does is a dynamic support and resistance, right? And it helps you understand where there's most likely going to be a support or most likely going to be a resistance for price, you know. And they're best used for exits, they're best used for entries. So those are the two main parts that you want to use EMAs for. Now, people have different strategies on how to use EMA. So for example, some people like the crossover, in which if price crossovers an EMA, let's say price cross below this EMA, that's when they look to sell. Or when price cross above the EMA, that's when they look to buy. you know uh, I personally use it. I use it in terms of crossovers, and I also use it in terms of support and resistance. So in my case, for example, if I was to go into this trade, you know, if I'm meant to go into this trade, like let's say today or tomorrow, what I would look for is I could go in the lower time frame, let's say for example in the 4 hours, and look for when price is going to touch the 20 EMA or touch the 50 EMA, and that's only when I go into the trade. So let me give you a prime example. Right. So let's say you are meant to trade these assets on this specific date, right? And when you're looking at it, you see these two EMAs, very close to each other. The best time to use the EMA is actually when they're spread out, because when they're close to each other and intertwining, there's most likely consolidation going on. See, when they're very close to each other, there's consolidation going on at those regions. And when they're spread out like this, these are the best time to use them. So before you use an EMA, you want to make sure that they're not like choked up with each other. They're like spread out, and then you can actually find the best time to enter. So let me explain. Let's say if I'm going to buy this asset, for example, and I'm here, I'm somewhere around here, and I start looking at this EMA start getting so close together, but the 200 is down here. What I could ideally do is I could wait for when price touches 200 EMA, or if I'm in a hurry, I can go in, right here. Now, it's not recommended to go in when the EMAs are very squashed together. I don't know if I've explained this before, but I have it in the ebook. I remember I'm meant to release an ebook for you guys. I have the ebook coming. We're just proofreading it right now, and I think we've done the proofreading. We have to proofread again one more time before we release it. So that actually explains the EMA and when they're like choked up together. So when they're together like this, you don't want to go into the market. You need it when it's spread out. So in this scenario, for example, you would ideally ignore all this part right here until price gets somewhere around here, and then most likely going somewhere around here or here. So in this scenario, for example, 200 EMA is the strongest one, followed by the 50 EMA and then 20 EMAs. Now, the 20 EMAs are meant to be used for the short-term trading. Let's say, for example, 1 hour, 4 hours trading. Uh, the 50 EMA is ideally good from 4 hours above. Then the 200 EMA is good from the daily above. They're stronger at that level. So 20 EMA from 1 hour, 50, 4 hours, 200 daily and above. So in this scenario, what I would have ideally done is if I see two EMAs close to each other and price is in close proximity with 200, I just wait for 200 and go in with the 200 EMA, right? That's how I will have done anything in this regard. So let's say, for example, right here, when everything is still ideally close to each other, I could have decided to go in on a buy from the 200 EMA right here, but I can't really say 100% based on analysis from fundamental signals. If my fundamentals is telling me on this day I'm not meant to trade this asset, I wouldn't even touch it. But if it's telling me to trade this asset and to buy, I would have ideally, let's say when price was here, for example, and price dropped all the way somewhere around here, I would have entered on the 200 EMA right here, which might have been a loss or might have been a profit depending on what the ATR ratio is going to be, and I would have ideally like move my stop loss into profit zone, and then if price then decide to come back down, it could clear me out in a little bit of profit, or if I'm unlucky, just stop me out and in the stop loss. So I still feel I haven't really explained fully, what the EMA and how to use them. So I'm trying to look for a good trend to actually, to explain it to you, because if I find the most ideal trend to explain it to you, if price gets choppy like this, the EMA seems to be not of any use at all. So in an ideal market, what you want to do is this: if price is moving away from the EMA, let's say, right here, price is playing around, moving away from the EMA, your entry is probably going to be somewhere around here. And when price drops here, for example, if we're still trading up, your entry is probably going to be somewhere around the 50. Now, I like to use the 200 the most. I use the 20 and the 50, but I like the 200 the most. Most of the time when we analyze the market, I tell you to go in, maybe around the 20, depending on how close or how wide the market is from the current price range. So in this scenario, for example, right here when the price is, all choppy, you can see the EMA overlapped on each other. They're just literally overlapping. So you tend to ignore all of this. You don't trade when you see your EMAs overlapping on each other. You only trade when there's widely spread out, and you can see when price came to retest the 20 right here, got in between the 50 and the 20, and then price start moving back up. So if you were trading in this scenario, you could have entered price right here, put your stop loss below the 50, right? Your stop loss should always be below the EMA. Your entry should be somewhere above the EMA or just touching on the EMA, and stop loss should be below it. So in this scenario, when you have the 20 and the 50 close together like this, what you want to do is go in on the 20 and put your stop loss below the 50. And then, hope for the best. That's if you're using EMAs only. Now, I do not recommend trading with EMAs only. They're just a way to help you signify when to go into the trade if you don't have entry indicators. They can be using entry as entry indicators, and also exit indicators, and also confirmation and consolidation indicators. They're quite complex, but you have to know which way to use them best. When they're overlining on top of each other, just stay away from the market. When they're all spread out, you use them as an entry point. You can either use your 20, your 50, or your 200. 200 being the most powerful, 50 being the next powerful, and 20 being the least powerful out of it. But the 20 is kind of like when you're catching a moving train. When something is already going and you need to really grab on it, that's when you use the 20. you know, that for that scenario. So I hope that explains a little bit better on the EMA. Of course, I know I didn't really touch on every single aspect of it, but if you want to learn that, you can actually get the membership online and learn that, or you wait for the ebook that's coming around. I did some explanation on the ebook, and I'll be releasing that soon. So the next thing is to go to CO2 report and what to look for. Let me quickly load that up. So on the COT report, for example, in this case, COT is quite simple. The way I use it, everybody have different ways that they use it, but the way I use it is quite, I kind of keep it very, very simple and straight to the point, right? The main reason being, you know, the more simple your strategy is, the better it is for you to trade more effectively. Now, in this scenario, for example, this is the COT report. Now, the report came out on the 4th, of May, right? So about 5 days ago. And what I tend to look at is I just look only to the commercials. I ignore the non-commercials. I ignore the totals, the non-reportable. And this is the only part that I look into the commercial, the changes. What are the changes that have happened between last week and the week before? You understand? So in this scenario, for example, remember long means buy, short means sell, right? What I can see is the commercials, which are the big boys, the people that are mining gold, the people that are using gold for certain industrial uses, maybe like NASA, for example, and like people using it as conductors in their mobile phones or computers and stuff like that. These are the guys right here. So in the commercial aspect, they're using it for commercial uses, so industrial uses, and they tend to buy it. It's like the daily lifestyle is what they need every single time to operate their companies, or the countries that they, that require these materials or these tools or these assets or these currencies. And what I tend to pay attention is they have the biggest money in the market. So I tend to pay attention to where the biggest money goes, and that's the commercial. So in your case, for example, if you want to use the COT report, all you just need to do is come on the the commercial side, look for the long and look for the short. If the changes on the long side is more, if you're seeing more changes coming to the upside and people are taking position away from the short side, for example, it means you should be focused just on the long aspect. Now, let me close this and open another asset just to make sure, give you a good example. So in this scenario, for example, we look at commercial only, ignore non-reportables, non-commercials, only focus on commercials, right? What we can see is there's more position on the short side while they've minused their position from the long side, which means I should just focus on selling these assets because these guys are selling. They're putting more position to the short side, okay? And JPY, JPY, for example, you see they're putting more position to the short side. So in this regard, we're gonna just focus just barely on the short side. Okay. So let me load up one more just to make sure I drill it really down. COT is quite simple. See, there's more position on the short side, so we focus a lot more on the short side. Only the trades we're looking to go for is on the short side. We ignore the long side because they're taking out position for the long side. Okay. Sometimes you do have situations where they have both longs and shorts in the same direction. So what you want to look at is the one that has the highest buying power. So if they had 6,000 position plus positions in the long side, for example, and have 2,000 positions in the short side, you want to focus more on the long side. So, but in this scenario, they're taking out positions from the short side, so you want to, and from the long side, so you want to focus more on the short side. Okay, and that's that one with the COT, right? Next thing I want to explain is entry. Now, getting best entry. Now, let me be honest with you. There isn't anything like the best entry. I have to be totally frank with you. Everybody say, "Oh, you know what? We get the best entry, the optimal entry." There is no way to determine the best entry because if we do have a way to determine the best entry every single time, you're never gonna lose in the market. If you have the best entry every single time, there's no way you're going to lose in the market. So there isn't anything like the best entry, but there is something as again that an ideal entry or an optimum entry for yourself so you don't end up losing the trade. And the way that I do that is quite it's quite different. So what I do in my scenario is this, right? I have this PZ day trading indicator. I put that up, right there. And then I get my PZ support and resistance, which is, or you can use any support and resistance indicator or any entry indicator. And then I get my EMAs in place. So let's say, for example, let's go on the lower time frame. Let's say already I know that, oh, this asset is going down. And I'm going on lower time frame just for reference, just for referencing, okay? And as you can see, for the guys that explain the EMA, look at when they were choppy like this, the market had no direction. You want them to be properly spread out like this, then you know there's a direction in the market, right? So in this situation, for example, what I look for in terms of entry, finding the ideal entry is this, right? So if I look at the market, right, and let me just go back. I want to find, oh, okay, my pizza doesn't go as far back as that. Let me go on a higher time frame then. Uh, so, see, for example, entries, right? The way entries work is this. If you have a support and resistance level, so around this level, for example, on price, you can see that price has been resisting this level for a while. Resist, 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 resist. So what you want to do is this. You only want to buy on this, on this trade if price breaks away from that resistance zone and then gives you a buy signal. Okay. So in regards, what I do is this, right? If I'm trading a breakout, there's so many other ways to trade. Some people trade breakouts, some people trade pullbacks, some people swing their trade. But let me focus on breakouts because breakout seems to be very successful if you know what you're doing. Pullbacks, you can't really estimate how far price is going to pull before you actually go in, but breakout seems to be more reliable in the long run. So I would recommend you actually just focus on breakouts if you're looking for entry. If you're new to the game, just focus on breakouts and you know just use what I'm showing you right here as a tactic. You can use any entry indicator, by the way. Just find one that you know that works good for you and stick to that one, and just try to understand that one a lot more better. So it will give you more profitable trades. So let's say, for example, right here, you see the price has been right here, right? And let's say on this day you're trading somewhere around here. You haven't seen all of this, right? And you're meant to buy. What tends to happen is when price comes around here, you'll be so excited to buy already. Don't do that. Wait for price to close and close above whatever resistance you're looking for. You're meant to go up from, right? You look for the closest resistance point and wait for price to close above that resistance. Then you go into the trade. Let me just check. Uh, Sniper entry. Okay. So what you want to do is you want to wait for price to pull away, and as price pulls away, or if price does consolidation, whatever it does, once price breaks above that place and you get that buy signal, then you go in. Okay, it's literally as simple as that. Now keep in mind your entries, you're not going to get entries every single time. It's not possible. You're not going to get it every single time. So the time you get it, you just bite down on it. Whenever you get that entry, just bite down as you can, as much as you can on it, and then let it slide. Now when I say bite down on it, I don't mean you risk your entire account on it. Of course not. You use your money management, and okay, this is a position I can afford to go in. I'm only risking 2 to 5% of my account or 7% of my account. So you go all your position once you have that entry in play. So what I do is this, right? For me personally, I like my price to close above the 20, 50, and 200. Now, the main reason is this. If price breaks out of this zone and if price is below the 250 and the 20, there's a possibility that price is going to hit that and act as a resistance and guess what, bottoms out. So I want something that when price close on where I enter, even if price retest that zone or my EMAs, those will keep it up. Now, keep in mind, it's not that my EMAs are magical or anything. It's just the average move which the market has been making. The market tends to stay above that specific average in that specific period of time. So what I do is I wait for price to break above it, then retest my EMA. Sometimes it doesn't really retest. Once it breaks above it and I get my entry for my PZ, I just go in on that entry. And then I can put my stop loss below the 200 EMA if the 200 is there, or the 50, depending on what my risk tolerance is. Because sometimes when price breakout, it comes back and retests where it broke out from, and you don't want to set your stop loss too tight. And because if you set it too tight, what will happen is price will ideally kick you out. Market will kick you out of your trade, and then end up going back in your direction. Okay, so that's how it works. So in this scenario, what you want to do is you want price to break out of that zone. give you that buy entry, then go in and set your stop loss below. Let me see if I can find another example. Let me pull up another asset. Right. So let's see. So in this scenario, for example, this is somehow similar to the last one, but there's a hook on this one. Now, keep in mind, the breakout zone, that's what we're looking for, right? Now, in this case, price is not always the same in everything. In this case, what you can see is price broke out of this zone right here, right? The PZ line, the support resistance line broke out of this zone right here. Price is already above all my three EMAs. So what I can do is I can go in once that gives me my entry and set my stop loss below here. And that's what happens. Now, you don't always get that 100% of the time. You understand? So if you don't get it 100% of the time, it's fine. But sometimes, most of the times, it does work. Right. So in this scenario, it broke out. Now, if we look at this place right here, right, there is a reason, there is a reason why you wouldn't take this trade. Simply because look at what happened. Price went broke out away from this region, already broke out from that region, came back to retest that region, then give you a buy. So what you're seeing here is this: price didn't really was never below this level. You understand? Price is already away from that level. So if you try to buy the asset after it broke at that level, see what happened. They came to raid you out, and then price consolidated well enough. You want it to be well enough below that line or resistance line. And then when it breaks out from that line, that's when you buy it. So right here, the price was not even well enough below that resistance line. Price just literally came in, kicked the 50 moving average, went back up, and then bottom out. Let me load another asset. Now this is BTC, so BTC won't count. All right. So let's load Euro USD, for example. Now, in scenarios of Euro USD, look at this one, for example. Now, price did the same thing, broke out of here, but we didn't get any buy signal. Came back, retest, broke out, came back here. But look, price didn't break out of the zone. So in this scenario, for example, you will have missed this trade. You won't have gone in on this trade. Now, the trick here is a lot of people say, you know, a lot of people don't want to lose this kind of trades. They want to be in it in this type of trade when it's going up and they feel like you've lost something. Sometimes it's good to have the satisfaction that you're right in your trade rather than going into the trade and then something happens. So in this scenario, for example, you wouldn't have taken this trade, you will have ignored it and just let it ride on. Okay, let me see if I can find another example to explain even further. So right here, for example, price didn't break above the resistance line, so you wouldn't have even taken any trade here, so this won't count. Right here, this wouldn't count neither. Price was playing below it, but price stopped right bang on top of it. So you wouldn't have gotten an entry. So that's the trick, guys. You have to find ones that you get an entry from. If you don't get an entry from it, you won't take it. Let's say, for example, here on the sell side, for example, you wouldn't have taken this trade because price is still between the 200 and the 20 and the 50. It has to be clear below it before you even consider taking that entry. Okay, let me see if I can find one more example and then I'll move to something else. Right here also wouldn't count, so you won't get any entry. So when you have that entries, they're very good. They're not very occasional. They come every now and again. They're not like regular. But when you get them, you bite down on them, and then you take your profit when it's ideal to take your profit. So I hope that explains a little bit more about how to get into your the right entry to get a better entry. Okay, and don't forget, there's nothing like the super best entry. There's nothing like that. Anybody that tell you they get the right entry every time, they're lying to you. You can never get it every single time. You can get as best as you can, but not every single time. So that explains kind of a breakout strategy. The pullback one, I'll probably explain that some other time. But try on the breakout, get some indicators together, then try on the breakout for a while, and then see how that works for you. Okay, does anyone else have any questions they want me to talk about? In the meantime, let me load. Let me see if I can load. If anybody have any questions, you can drop it. You can drop your questions in the comment box, and then I'll be able to answer that for you. Right. Okay. So CHF this week on CO2 report, as explained before, it's looking like a short, right? So what I can do is I can load up the seasonality report. All right. I just want to quickly do a quick analysis and just do stuff. Today, I really want to just bang on more about questions and answers. So, that's why I'm really here. So, if anybody have any questions, please don't be shy. Feel free to ask any questions that you have. Okay, and I'll be able to answer them for you. So now, let me quickly look at a few assets. So CHF is looking more like a sell from the COT report, but from what I can see here on the seasonality, nah, it doesn't look good. So I'm gonna literally let that go. Okay. Gold, gold doesn't really have that much volume on the COT report from what I can see. It just has a little bit of buy volume, but a lot of people have taken out the position from the short side. So let's see what the seasonality is telling us. I mean, from the COT report, you can see they're adding more position to the buy section, which is a long section, and they've taken out a position from the short side. I mean, so we should see a little bit of boost coming to gold, but might not be that heavy. So nine, okay, 10. So I mean, with gold, what I can see from gold is on the 10th, which is tomorrow, up until 12. We can see a little bit of buying power coming into it. Now, I don't like to take trades like this. I genuinely don't like to. They seem to be heavy risk because the move is not long term. It's just a short term. It's a short term pool, and so I don't like to do that. Mm, Leo, I would say the higher the time frame, the better it is. The higher the time frame, the better it is. You can use them on the lower time frame as well. They do work on the lower time frame, but I say the higher the time frame, the better it is. From 4 hours above should be fine. You can use 1 hour if you like. Some people use 15 minutes and 5 minutes, depending what your criteria is. But what I would recommend you do is this, right? I recommend you go into the market, go on a let's say on a daily time frame, for example. You go on a daily time frame, and then let's say, oh, this is your region of support. This is where you see, price is most likely going to retest right here, this zone right here. So what I'm going to do is this, right? I'm going to go on that, and I could then come down on the lower time frame, maybe like on a 15 minutes or 5 minutes, and wait for price to get there. Just looking at this on the daily, right? You see on the daily where I like this green section as the zone, and when I came on the 15-minute, you can see the 200 moving average is right there, and then there's a support. There's a previous resistance, which is now support right here. So an entry will be around, just bang on around here, you know, for this asset if I was meant to buy it to the top side. So the best thing is to do from a top bottom sweep. So you want to sweep from the daily time frame all the way down. Mukhtar, you said CAD seems weak, might be nice to appear. Yeah, so CAD, I think USD is strong at the moment. So CAD might be a good one. Let me quickly run through. I want to quickly check one thing. I'm going to check the CAD also now. I've loaded up. Actually, wait, wrong thing. Um, we don't have that much time. I think we have like 10 minutes left. So I'm just going to do a quick analysis. I really just want to make sure that I'm solving out questions today rather than do more analysis. It's always good to have those moments. So, yeah. Uh, so I just want to check the probability of gold. Then I'm going to come back to CAD. We'll see what CAD is saying. While that is loading up, we can check the CAD COT report. So with the gold, for example, we see that from tomorrow, the 10 up to the 12, we should have a little bit of buying power coming into play. All right. So, right. So what I can see is that buy does seems to, be in play, but then we have that 50-50, that 50-50. So that's a heavy risk trade already for me, just by barely looking at it, you know, it's a massive risk for me. It's a risky trade. So it's telling me to buy. Now, looking at this, price has already moved at least from the 200. I mean, from the 20 moving average, you can see when price came here. It's moved 739 pips and then settled for 620 pips. I wouldn't want to say I want to go back in there because what I can see is price have already broken out from this region. Price is most likely going to retest this region. So for gold looks like too heavy of a risk. So I wouldn't take that trade on gold at all. Right. Let's check CAD. So CAD, wow, okay, there's more selling power coming into the CAD. I can see right here. Let's speak Mukhtar. Let's see what the seasonality I have to say on CAD. Right, the ninth. Okay, So CAD on the 11th, right? Between 11 and 12, which should be, I think, Tuesday, right? So from Tuesday, Wednesday, we should see a short side coming on the CAD, right? So I'm going to try to run through this quickly. It seems like CAD pair might be a good one, to be quite frank. So let me just run through and find CAD. All right. So I'm just going to run through CAD, CHF, CAD, JPY. So all the CADs I can find. Um, all right. So what we're gonna do is we're just gonna run through them quickly, see what we can find on them, and then wrap up the session. So from CAD, we're looking all the way from 11, 12. Okay. So this is CAD, CHF. We're looking for sell power because this is already May. Yeah, that's correct. Um, okay. From what I can see here, Monday, sell, buy, 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 buy. No. So CAD, CHF out of the click. No go for me personally. So let's check. So what is this? CAD JPY is telling me buy, so no go. All right. Um, I mean, don't get me wrong. Some of this trade might actually happen, but it's just because of the way I trade. I just don't mess with it at all. You know, I've learned to always stick to the strategy. So Euro CAD, Euro is giving me sell instead of buy. I'm looking for more buy, so I'm just gonna stay away. So um with this one, USD, right? Even with the USD, I can just see 50-50. I mean, that could be something that can be risked. I think it could be something that could be risked, but I like to play safe with guys, that are very new. So I wouldn't want them to risk their cash on something that might not be fully set, and that doesn't look good neither. So, um, right. That doesn't look good neither. So left with just one CAD. Now on May. So with the CADs, for example, right now we can see from what I can see from the probability chart, it doesn't really look good. Now this doesn't mean the trade wouldn't happen, right? So this is what I do on these days when the alignment is not full. So I would just go on CAD asset, for example. Now this is for people that are more advanced in the game. If you're new to the game, I wouldn't even recommend you just let it go. Sometimes it's just best to just watch the asset go and do stuff. You can see USD has been bottoming out heavily on the CAD, right? So what I can do in this scenario is this, right? I would go and check which asset is meant to gain strength on the 10th, right? Which one is meant to gain a strength on the 10th, and then I'll compare the COT report and see if I can find anything that that's going to be beneficial in that region for me anyway. So let's check JPY. So JPY2 is meant to fall, so there's no point. Check Euro. All right. Okay. Euro 2 is falling during this region, so no point. Let's check USD. I think I can remember USD was going up, but I can't remember now anymore. I don't think. All right. So USD is meant to be going up, and from what we can see, on price, US been getting the beating of its life. Understand? So there's something definitely going wrong in the United States economy right now, which I haven't really researched into, so I'm not really clued up about it. But it's probably gonna be something massive anyway. So USD looks as if it's meant to go up, but from what I can see, they've been taking a dump on USD, so it's not happening. This is why you don't rely on just one indicator, just like the seasonality. You also have to use the COT report and also the probability to be sure. So from what I'm looking at anyway, there hasn't been any asset that is looking to go in the buy direction so far. This is GBP also falling. So with the CAD. So what I would do in this scenario is if I really want to take that trade because I do believe that that trade is going to work. Oh wow, AUD2 looks like it's going to have a massive dump. So that's cool. Probably analyze that later on. So what I would ideally say is once I check all of this and I see that okay, this doesn't also look good for that. What I would do is this, right? I'm just gonna go on the asset on this specific date, right? That I'm expecting CAD to have a dump, and then if I see USD start moving back up towards that direction, what I can do is I can then start looking to look for a buy entry, then having a very tight stop loss. Another trick though is this, right? This is another trick which can work and might not work sometimes, is to look for which asset has a long, which has long coming in on the COT report. So from what I can see against this CAD, nope. So I mean, looking at it, doesn't really look. USD does, but doesn't really have that much. So every asset seems to be taking a dump. I mean, GBP would look good because they're taking out more position on the short side compared to the long. So if we look at the chart, you can see that commercial come up. So GBP might be a good one. So it might GBP CAD might be good. We have like 2 minutes left. So AD is not good, and NZD also not a go. So from what I can see, GBP seems to be the best one. Obviously, they've taken out position from both sides, but what I can see is they took out more position from the short side than the long side. So what I can expect is probably GBP CAD going long in this regard. So what would happen is on the 10th, for example, and 11th, I can come and look at the market and wait for price the GBP to close above the 20 EMA right here. So the same strategy as follows before. So you want it to close above, give you that buy entry, and then you can buy. Okay. So everything kind of like links together and work together. So out of the entire what's it called, CAD asset, for example, GBP CAD might be the only one that might play out, or a lot of other assets might play out against the CAD depending on it. But I would rather bank more on GBP CAD because I've taken out more position from the short side, which gives the long side chance to move a little bit more. So this would be a good one to look into. But the risk on this is super massive. It's the highest of risk that you can expect from this. So guys, that practically sums it up for today's session. I'm not really looking to do major analysis today. I'm gonna do analysis later on. But yeah, so I'm glad that I could answer the questions that everybody have. And if you have more questions, we can get to that next week, or you can ask me on Telegram. Okay. So this week's training, guys, you might have to go on out and go do your analysis on this. It's sometimes good to just have a variation and do some work in the background and do your own analysis. And then if you have a trade that you think might work, post it in the group and I'll check it out, and then we can probably discuss about it. Actually, let's do that. Let's discuss about it in the chat room, on Telegram. Okay. And we'll take it from there. Take care of yourself, guys. And thank you very much for attending today. God bless you all. Bye.
Thank you.